Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in today's video I wanted to start it off looking at Apple. So I've been doing these free videos and trying to focus on some of the bigger names, giving you guys some areas where I think there is opportunity, or at the very least where I think there's about to be a move underway. Now you say, well, why do you think there's going to be a move in Apple? And it all comes back to the primary signal that I like to focus on with the squeeze. So squeeze is nothing more than compression and expansion of implied volatility, price ranges. As you look at it here, this one was triggered by earnings, so sometimes can be a little difficult to play. This one, I believe, will trigger prior to getting to earnings. So when you look at a pattern like this, and you know, okay, a squeeze is coming, and we're expecting that it's going to have a big move, which direction do we think it's going to go? I like to always start with my weekly charts. I like to start with these weekly charts and measure extensions. In the case of Apple, there's a couple that I'm going to look at. This one is interesting to me because it is very broad. You can tell that this is a major swing high, a swing low that goes all the way back to a high made in 2012, down into a low made in 2013. So it's a massive, serious swing. From that perspective, it has made the 1618 of that move. Obviously, these levels have been surpassed, so you clear those, but when you are near extensions, especially major extensions of previous major swings, it's just a time to be cautious. So that's the first 1618 that gives me a little bit of a heads up. As we drill a little bit further down into this weekly chart and use the next swing in this analysis, notice how you have a perfect overlap. I say it's perfect, it's a few cents off. If we put these on the left, it'll be a little bit easier to see. But you can see this relationship, so 129.09 versus 128.97. Considering how broad those swings are and how perfect the relationship is, it just helps reinforce the idea that we might, at the very least, have a pause there. So these are all the reasons why I'm cautious off the weekly chart. Then when we step back down to the daily, I feel that if Apple was truly going to hold its bullish tone, not only would it have held this trend line, but it also should have done a better job of holding its pullbacks to the 21 EMA. The 21 EMA is usually a pretty good representation of stocks that are in a good, reliable trend, and you'll notice that here, we failed on the pullback to the 21, recovered it, and then failed once again. So, between the fact that we can't get that trend reestablished, we've made extensions, and the fact that you've got a fire line at 128.72, I think these are all the reasons that we need to be very cautious for the potential of Apple firing short. And then, of course, the impacts that it will have on the market we'll address as that unfolds. The only caveat to that analysis is that if we get a weekly close, which in this case will be Thursday, above 124.50, then I will have to revisit this. Shorting something that is as strong as Apple has been, I know can be a little dangerous, but at the very least, being mindful of those extensions and resistance will help, and I think give the bears out there some opportunities should this one start to break down. So I hope you find the analysis helpful. Apple should not be dull over the course of the next several days. We'll update you guys as soon as that signal plays out.